Hello traders, today is the 27th of April. My name is Neville Hornsey, market analyst YouTrading. And today I'm looking at the Australian dollar. Now I like Australian dollar and other commodity pairs because generally they trend. It takes quite a lot of economic data to get them to sort of change their trend. So once you get into a good trend, it's best to stick with it. So on a daily chart, we'll be looking through several pairs, starting with the Australian dollar versus the yen, because if we go to YouTrading.com/heat map, we can see that the Australian dollar is the strongest. You can see it's darkest green, and the Japanese yen is currently the weakest, red across the board. If we go to what happened last night, we saw that Australian CPI came at 5.1, which if you look to the left on this chart, takes us all back to early 2000s, so a good 20 years worth of inflation data, and it's the highest it's been for a long time. Going to the VIX, we've also got an elevated VIX. It's due to open up above 30 again. So we're expecting to see range expansions, which is good for trending days and things like that. And if we just go back to YouTrading.com/heat map, you can see the bottom left-hand corner is mainly green, top right-hand corner is mainly red. So it's more of a risk on day. So looking for commodities to sort of carry on doing well. So going to the actual active trader platform, if we look to the left, on this tab up here, we can see that we've got a sentiment indicator underneath the currency pairs. 77% of traders on this platform are trying to currently short the Australian dollar versus the yen. If we look through, the bias does change depending on which of the Australian dollar is crossed with. If you go to the euro versus the Aussie, the euro is 63% long, so that's essentially 63% short of the Australian dollar. Going back to the Aussie yen, from the video that I released before, we've got this trend following strategy where we're looking for continuation indications above the 200 period moving average to go long, and we're waiting for a pullback in the Bollinger Band percentage B, which again just sort of signifies that there was a close below the Bollinger Band. Now the Bollinger Band expands and contracts, and during the contraction, that is a range. So we're seeing this sort of price action where we have a decent trading range for the high and a low, and then price action sort of just trailing with inside it. Then we had a poke out to the upside, but you can see here that was straight up and closed above the Bollinger Band. And if we come back down to yesterday, that's when we actually closed below the Bollinger Band. So this contraction, they've just expanded the range, and now we're looking for an expansion to the upside because we're in an uptrend. So it's going to hopefully, if all goes well, pan out like this. So we had a range, expansion, and now we're just looking for a big continuation to the upside in line with price action that's obviously left the 200 period moving average down here. Now, the idea is obviously to wait for this. This is our signal. The filter is we're looking for trades above the 200 period moving average. And then the actual trigger is when we get a daily close back above the 9 moving average. So we're just waiting for this to set up. But it looks like 77% of these traders on this platform are trying to go short. So they're expected to see maybe the middle of this contraction to hold before a reversion to the mean back down towards the 200 period moving average, whereas we're going to look to sort of take their stops, which will probably be above this swing high, and then carry on to the upside, like I said. All right, so that's a bullish Aussie continuation trade. Australian dollar versus New Zealand dollar, obviously quite closely tied in terms of geographics and politics, and Australian dollar is generally stronger than the New Zealand dollar because the economy is larger. So looking here, we've got Aussie New Zealand dollar was in a sort of contraction sort of range, and then we did have a signal to go long back here on the 17th of March, and maybe some take profit opportunities when the price got back above the volatility bands here and here. But at the moment, we had 13th of April, big up day, then a big sideways move. So I am expecting to see prices of the Australian dollar versus New Zealand dollar come a little bit lower, just so we get this indicator back below. That'd be ideal. Then we can start looking for trades which then close above the 9 moving average before we get a continuation to the upside. Obviously, that might not happen. We might just get a continuation to the upside without a bigger pullback. So yeah, we just have to bear that in mind and then trade accordingly. Australian dollar versus US dollar is the major cross. Obviously, the US dollar has been on a tear. It's just touched 102 yesterday. So we're expecting to see some profit taken in the dollar, but with yields and inflation and CPI and FOMC and Fed news all to come, the Australian dollar could weaken further against the US dollar because the US dollar is so strong currently. So we did have a cross here with the 9 period moving average over the 200. So we are looking for a bearish continuation to the downside. If we look to the left, we had this trading range here. They expanded to the lower than to the upper. So if I just draw a box around this high and this low, and then expand it to the right to sort of show what I mean. So we had this trading range back between October 21 and December 21. So that's the last few months of 2021. Then end of January, poke below, beginning of April, poke above, then collapse back inside. So fake out, shake out, maybe a breakout to the upside. It's going to take the US dollar to obviously come down a lot lower. At the moment, we're not expecting that to happen. So these guys might have been trapped long, and therefore we're looking to take the liquidity below this low here. Obviously, for this strategy, the end of day strategy, we need to see a pullback for this Bollinger Band percentage B to come back up here above the signal line of 1 before we then start looking for a close back below the 9 moving average. If we look here, we've got a little demand zone, which is around 0.7. So we could get some buyers there. We've also got a supply zone around 0.74. So possibly going to go sideways for a lot longer whilst the Australian dollar is strong because of high commodity prices and inflation, and also US dollar is strong because of what's happening over there. So at the moment, no signal, no trade to make on Aussie US dollar, though the trend is starting to look intraday to the downside. Now the euro versus the Australian dollar generally trades inverse. So if we're seeing here that 63% of traders trying to go long the euro versus the Australian dollar, that means we're looking to fade that. So we're looking to go short euro Aussie, which means we should also be looking to go long Australian dollar versus the US dollar. So there's still a bit of time, obviously, for that trade to pan out, but maybe we'll get in earlier with the euro versus the Australian dollar because, like I said, we're looking to fade the retail sentiment, which is biased towards the long side. So we're looking to go short. We've just seen a couple of days ago that price action popped out above this swinger high here from the 31st of March. We are in a downtrend. We can see that the price action is way below the 200 period moving average. We do have a supply zone around 1.52, which is be a big figure to get. But yeah, just looking to see if we can go maybe up into the supply zone before a collapse down, or if we get a close below this moving average, maybe we'll be able to sort of see some sort of continuation to the downside a bit quicker. Lastly, pound versus the Australian dollar hasn't quite made it to a close above the Bollinger Band, so we haven't seen a signal here. We did see one back here in 28th of January, at the beginning of the year. Then we had the big sell-off, like you can see here. So a big impulsive move to the downside, probably a 5-wave move, to be honest. If I was just to get the Elliott wave up, some people might be looking at that as wave 1, pullback, wave 2, big extension, wave 3, pullback, wave 4, and then 5th wave completion. So some people might have marked that up as a 5-wave decline, but you can see it's an impulsive move to the downside. It's not corrective. It's definitely expanding a range. Now we're just looking to see if we're going to get a continuation to the downside or whether we're going to get a larger correction within this range. So at the moment, no real signal, just possibly a continuation to the downside, which means the pound weakens and the Australian dollar gets stronger. But so far, if we look back through quickly, Australian dollar versus the yen, if we get a close back above 93.02 would be a good long. Australian dollar versus New Zealand dollar, no trade. Aussie US dollar, no trade. euro versus the Australian dollar, maybe a short trade. So Aussie yen and then Euro Aussie are probably the two trades that I'll be looking for at the end of today's trading. All right, good luck, and I'll speak to you again tomorrow.